It's Forex Focus, brought to you by IG. Really crazy day in the Forex markets, particularly in this US dollar Canadian dollar pair, as we had employment figures not only from the US but also from Canada hitting a new high above 136. If you look this morning, both the US and Canada released job figures at 8:30 Eastern Time, sending that US dollar Canadian dollar pair through 136 immediately, gaining over 75 pips as the US released strong employment data and Canada released weaker employment data. So you saw the immediate result. That makes sense. But now you're seeing a bit of a retraction from that US dollar, still holding on to some gains against the Canadian dollar, but against other major pairs we've seen a complete reversal midday. So what happened in Canada? We saw employment rate shoot up to 6.1% against an expected 5.9%. And while those aren't great numbers to begin with, 5.9% isn't that far off of what we've been seeing lately from Canada, holding around that 5.8, 5.7% level in recent months. So that 6.1 figure, shocking, I'm sure, the Bank of Canada ahead of their meeting next week, but definitely weaker than expected. Different story here in the US. US unemployment rate coming down off of 3.9%, beating expectations to 3.8%. Speaking more to this robust US strength we've seen in recent months, as we expect the effects of 5.5% interest rates to start to trickle into these data releases, but really haven't seen it in these jobs reports. We thought last month, with a higher than expected US unemployment, that okay, 3.9%, that's palatable, but it's not going to get any lower, and here we have it, down to 3.8%. And what's leading that is this non-farm payroll release. 303,000 jobs added in March. And if that's not a big enough number for you, we were only expected to have 200,000. So a mishit of over 100,000 jobs, which is really interesting. There is some more nuance to these non-farm payroll releases as of late, because looking at this chart, you see that 2024 has been strong, but what you can't see is that those numbers have been higher. Here you can see that this 303,000 level is the highest you've seen since May. But if you're thinking, I could have sworn I heard that 350,000 jobs were added recently, you're not crazy. In January, February, we saw some of those higher numbers shooting to highs of 353,000. But in the next month, we've seen those numbers get revised lower. Now, I think the third month in a row, as our March release for February statistics got revised lower by 5,000, previously at 275,000, and now down to 270. So while this is a huge number, a huge miss to the upside in this US labor market, traders not really sure how much they can trust this headline number given the recent revisions. And what does that mean when you're contextualizing these historic Forex prices? USD CAD has seen prices higher, but not in a few months. This 136 level, while not closing that high as we've come back slightly, hitting 136 is a high going back to November, October. And if you look even higher, 139 seems to be the top for the past 4 years, and that's only 300 pips away, as we've seen a climb this year alone of more than 300 pips. So this 139 level that seems to be a resistance level hard to get through is not that far out of the question. Looking all the way back to 2020, start of the pandemic, you did see prices all the way through 140, even hitting 145, but then normalizing all the way down to the recent floor of near that 120 level. So 136, while it looking at the past 4 years plus, like to be in the middle of the range, not that far off of highs for US dollar, as the US continues to print strong economic data, with employment being a very strong sector as of late, and Canada not seeing those effects as much at all. We'll see what this has to do for the US dollar going forward, but for now, 136 in that dollar CAD level. We'll see where it goes.